And there we go. Should be good. Okay. All right. Julie, do you want me to, or would you like to
What? Oh, let
do an
people
intro?
in?
No, do an intro.
Oh, I'll let you do that.
Okay. All right.
Thank you, though.
Absolutely. Well, guys, appreciate you joining us. You know, one of the great things about this digital age and COVID is that we get access to some great people, some great sessions, and some great information, stuff that we may not have had access to. One person that we do have access to, which you'll be seeing a lot more of, is this gentleman that I'm going to introduce in a second. And VA loans are his specialty. He is the man about town when it comes to knowing everything about it. Rick Bettencourt has been a part of our office and our office meetings and some of our trainings before, and he's here with us today to talk about VA loans with Caliber Home Loans. So, Rick, I really want to thank you so much for taking time to really educate us as agents on the VA loans, the VA loan process, and any other information that you really can provide to us. So, as always, thank you for taking out of your day to go ahead and give back to
Tim,
us.
for me, I have nothing but the utmost respect for you and Jason and everybody in your office. I've had always good experiences. We're actually working with Natalie Fiore and Eileen Duff right now on a transaction that's clear to close. It's up in Gloucester. It's a VA loan. It was clear to close almost 2 weeks before it's really going to close. So thank you very much. And anytime I get an opportunity to speak to my referral partners and our real estate industry partners about this topic, it's very, very important for me. And I think that, you know, what I did today is I didn't want to talk a lot about the minutia of the process of a VA loan. That's you know, the underwriting a VA loan is no different than underwriting a conventional or non-VA loan. They're very much similar, but it's a lot easier with VA. We'll touch upon that in a little bit. So what I wanted to focus on today was engage with our partners and like, why? What's the issue? Like, what's bothering the seller? What's bothering you, the listing agent? And I wanted to talk about that and get feedback, and because we're always looking to dispel the myths and the rumors. And I'll be honest, this VA loan was created in July of 1944. It's 77 years old, and there's a long history. In the early days, it was tough. It was difficult. There were aspects of it that were not favorable to a real estate transaction. So I get that. But it's time to teach the old dogs new tricks and realize what's going on. So we'll dive right in. And I want to share with you this. This is a very important slide that as many of you know, I've been very active in the mortgage regulatory compliance and legislative side of things for 15 years with the National Association of Mortgage Brokers. And so I've actually, I think I'm the only mortgage professional from New England that has actually interacted with VA Loan Guarantee Central Office on a regular basis in DC. And this statement right here is actually from one of their main conference training rooms at what we call VACO, is VA Central Office. And freedom is not merely an entitlement, but a privilege earned by the people for the people. I honor and proudly serve those who have served for me. And that's what every one of us are doing, realtor or mortgage professional, when we work with a veteran. This is not a loan program, and everybody needs to understand that. This is an actual codified federal law legal benefit that our men and women in the service earned with their honorable service or their service requirements to the United States. So, and that's the reason why it takes a while to change VA. It actually takes Congress. And we've seen that happen twice in the last 24 months. Senate Bill 2155 changed our cash out refinance and our streamline requirements. And the HR 299, which I'll share with you guys in a little bit, the Blue Water Navy Act. So to change this particular loan, you actually have to get congressional approval. Now, VA can issue policy.
Disturbed, and I'm sure that they had a bad experience.
Oh, all right. We'll get to your question in a second, whoever that was. But thank you very much for speaking up. I appreciate that. And so what we're trying to do is understand that VA, unlike Fannie and Freddie can change their guidelines and FHA overnight. And VA can have some policy switches through what are called circulars, but it's very difficult. So a little bit about me. I've got almost 18 years in the business. About almost 80% of all my clients are veterans. I think in March, we closed 35 VA loans. As of production numbers that I've seen lately, I'm the #1 VA originator based in New England. So I do more than any other mortgage professional based locally here in Mass, New Hampshire, Maine, Connecticut, Rhode Island, and Vermont. I hold several certifications: a certified veteran lending specialist, CRMS, which is a 2 certifications for a national nonprofit that oversees the mortgage industry. I'm on the Mortgage Bankers Association VA committee, and I co-host a couple video series called Home Ownership Heroes. It's a great series, guys. Go to YouTube, type in Home Ownership Heroes, and you'll find a series of 3 to 5 minute videos that me and my senior vice president of military, Brian Bergians, what we put on all the time. I was a guest panelist at the Department of VA Loan Guarantee Lenders Conference in 2018 and a military influencer conference. So, and I speak all over the country on this, and I'm a nationally recognized subject matter expert and practitioner. So this is what I do. This is what I love to do. And I want to help you guys help more veterans. So a little bit about Caliber. Our growth in Caliber is new to the market, but we're not new to the industry. In 2020, we had a 40% purchase market growth in 2020. That beat the entire MBA index by 17%. So the average lender in 2020 grew by about 23%. We grew by 40. In New England, our purchase growth was over 54%. That's a direct relation to the fact that real estate professionals love working with us for a variety of reasons. Technology being one, operationally, and as you can see here, we have a $150 billion servicing portfolio. We don't sell our loans. I think we're the only independent mortgage banker here in New England that doesn't sell their loans. We hold on to them. And our servicing portfolio is going to go up to $600 billion due to our merger with NewRez. And we're going to be the only retail mortgage originator or mortgage bank in the US that operates under a REIT, which is a real estate investment trust, which is going to make things a game changer for us. Our technology is top. We have our agents actually have their own mobile app to track their transactions in real time on their phone. It's a phenomenal tool. I recommend that. If you're working together, let me know. I'll share the link and you can get that. We're the preferred lender for the U.S. Veteran Chamber of Commerce. We're the only lender that I know of that actually has the own internal military lending division that is designed to help veterans access or acquire documentation to make the transaction smoother. So it's pretty awesome stuff. So would you, if I shared the following information about a particular borrower that's going to be making an offer, what would you think? So average credit score 733, average median income $7,000 a month, average debt to income ratio 41.9, average liquid assets 27,000, average closing time 29.4 days, and 86.3% of all purchase loans closed. If I said that data to you when I'm making an offer, that's a pretty good loan. That sounds like a conventional, non-VA, non-FHA type of purchase transaction. And that is what our average VA borrower at Caliber was in 2020, as verified by the Department of Veteran Affairs annual scorecard. We closed 28,377 VA loans last year. That's almost 77 a day. And this is the average VA borrower that we have, which means if my average FICO is 733, then there's a lot of veterans that are over 733 out of 28,000 loans. This is a phenomenal benefit that's out there. And we have to start understanding what this VA loan does and for our heroes and our servicemen and women. And then you got to understand that it is by far a better loan option than a conventional, than an certainly FHA. And Tim and I were just talking about that with some of the team before we turn live here. You would never want to accept an FHA over VA, ever. I mean, if you saw the stats and the delinquency and default, the foreclosure rates on FHA, it'd be crazy. So I think you have the ability to chat here. So my next slide, this is a question for you guys. So what is it about, and that's what I want to know, what is it about the VA loan that makes it less appealing than non-VA? What is it? Is it the down payment? Is it the deposit? Is it property condition? Is it rumors in the back of your head? You feel that it's not going to close on time? Do you feel that there's not going to be, it takes too long? I'd love to know. So use your chat feature in here and start writing some questions or some concerns, and we can talk about those as we get, we quickly got one. That's just pretty awesome. Right, the down payment in this market. And we're going to talk about something. We have to get away from calling down payment and deposit the same thing. They're not the same thing, guys. Down payment and deposit are two totally different things. And that's the reason why on page 2, top portion, there's the actual section of the contract to purchase where it tells the amount that you're financing. So deposit is different than a down payment. And we're going to talk about that. So, you know, veterans know that they need to have a deposit to buy a house in the Commonwealth of Massachusetts. We absolutely tell them all the time. The deposit is a relative piece for the individual consumer. And that's where we have to have a deeper dive conversation on the so-called skin in the game, or what's happening. And I understand this market. Believe me, I'm seeing it myself. So, but that tends to be the focal point of where people kind of get hung up on VA. And we're going to talk about that. So, and before we go, I want to kind of dive into some other rumors. So here's some other truths and falses, you guys, that I want to talk to you about. And we just recently had, I'm a premier sponsor for G-Bar, and I'm a sponsor with North Shore Realtors. We just had a huge webinar where I actually brought in the department. So if you guys, if Keller Williams ever wanted me to do an individual Keller Williams only VA webinar with the Department of Veteran Affairs Chief Valuation Officer from the Cleveland Regional Loan Center, I can set that up. We did that for G-Bar 3 weeks ago. And these are some of the concerns or questions or truths or myths that were some of the referral partners brought up. Seller is required to pay some or all closing costs. That's false. Doesn't have to happen, guys, right? The seller must pay for the pest inspection. That's false. That was changed in 2015. The seller is not required to pay the pest inspection fee, nor are they required to pay any sort of treatment for infestation if they so choose. They want to negotiate that between the buyer and the seller. That's totally fine. This is a big one. The property's got to be perfect or turnkey. False. A good buyer's agent that understands the VA is not going to show a veteran a house with significant peeling paint or missing handrails or dilapidated structure or holes in the wall or exposed wiring. They're not going to show them that. And even if they do show them a house with peeling paint, or the appraiser identifies minimum property requirements that have to be addressed, the big rumor is the seller's got to pay for those. False. Nope. Veteran can pay for any repairs to that property prior to closing if they so choose. And we've done that many times where we've set the purchase transaction up. The loan is essentially clear to close, except with converting the appraisal from subject to as is. It requires the expenditure of money on the veteran side to fix those issues prior to consummation. The veteran can do that all the time. This is another big one. VA appraisers appraise the property differently. That's false too. We're going to talk about something that probably most of you have never heard of before, but the USPAP guidelines are what govern appraisers across the board. VA simply means that you have an extra level of certification, an extra level of experience, and that VA has added you to their staff appraiser list for the Regional Loan Center. But the valuation process is the exact same. And I did a lot of purchase transactions in 2020, and I had a few where the value came in less legitimately, and the veteran, was, oh, look at that. The next question is, veterans can't pay more than the appraised value. That's false. Veteran can pay more than what the house is worth all the time. Just had a conversation with two excellent real estate professionals yesterday. Rick, I was told that the veteran could only pay up to the appraised value. Nope. The house came in at $20,000 less. The veteran said, I'll pay the difference. We're good. Done. And that is a big issue or big rumor that we have in the market space. VA loans take longer to close than non-VA. That's false. I just showed you my statistics from 2020 on average, we're closing VA at about 29.4 days. So VA is no problem. It's a piece of cake. It's just a matter of whether you're working with a practitioner or you're not. And sometimes, you know, one thing about VA is that it is a story loan, and it's a story loan for a reason. It's a story loan to give the veteran the opportunity in unique situations to still consummate a deal, even though it doesn't fit the traditional sort of mold there. This is one that I get all the time. Sellers, buyers, agents, listing agents, if they don't have any skin in the game, that means it's a bad loan. That's 100% false. Listen, guys, they're not putting a down payment down because they don't have the money. They're not putting a down payment down because they don't have to. They don't have to. They earn the right to not put a down payment down, not a deposit, down payment. They earn the right to buy the house with no down payment. And that right grants them a 25% guarantee from the Veterans Administration. So if a borrower borrows a loan, a $400,000 loan from Caliber, there's a 25% guarantee from the VA to Caliber for the amount of money that's been lent. That means 75% of the risk is all I'm taking on as a lender, and 25% of whatever risk is associated with that loan has been picked up by the Department of Veteran Affairs. That means you guys should understand that every VA loan essentially has a 25% down payment behind it in sort of the cloud space by the Department of Veteran Affairs, which is the reason why there's no down payment, rates in the twos, no PMI, much more flexible underwriting guidelines, and it's a better transaction all the way around. We talked about this a second ago. There's no difference between down payment and deposit. That's false. There's absolutely a difference, and you have to change the definition in which you speak of when you're setting up a transaction. The deposit is the good faith deposit for the veteran or the customer when they go to contract the purchase and ultimately sign the purchase and sales agreement. That is not a down payment. It's just not. On the second page of the contract to purchase, that is where you define such. On the second page, top of the contract to purchase, it is the financing amount. And you can do this, a $624,000, 100% financing, page one, $50,000 deposit, top of page two, $625,000 financing. That is how you are properly supposed to set up a contract to purchase on 100% financing. And just because there's no down payment doesn't mean it's a bad loan. Not at all. Now, the deposit is important, and we tell our veterans, hey, listen, you need to have a deposit because you got to have some skin in the game as far as the seller knows you're serious and that you're not going to walk away, because what seller is going to take their house off the market and lose 30 to 45 days of marketing, and then all of a sudden 2, 3 days, 4 days, 5 days, the buyer walks with no money and as earnest money deposit, and then he can, there's no loss for him. 100% agree with everybody on that one. There's no doubt. But deposit, down payment, two totally separate things. It's just our industry uses them two interchangeably, and you really shouldn't, because it's just not how the contract of purchases are actually set up. Now, 100% financing means it's a bad or difficult loan. Couldn't be further from the truth. Couldn't be further from the truth. Again, people misunderstand the fact that the 100% financing is not because they're a poor borrower. It's because they don't have to, and there's a difference. I've heard of many conventional transactions with 15, 20, 5%, 30% down that didn't close because income was not calculated properly. The gift funds weren't issued properly. There was a change in job. There was any number of issues could affect. So, and Fannie Mae and Freddie Mac have correlated without a doubt, unequivocally. There is no correlation between down payment and closing of loans. It's tied more to credit score and debt to income ratio. That's the reason why you're seeing the Consumer Financial Protection Bureau talk about the QM patch. You're talking about limiting borrowers to buying a property based on debt to income ratio. It has nothing to do. If the CFPB was really concerned about down payments, they would have referenced that in the most recent discussion on the QM patch. But it wasn't. It was all about DTI. And the other thing is it's credit score. So the other keep in mind, remember, in the back of your head, you got to understand, the VA has backed 25% of whatever the veteran borrows for the lender. So there's not a lot of risk for us. Well, there's only 75% of the risk, not 100% of the risk. So it's not a bad loan, guys, when they don't put any money down for a down payment. And if a veteran does a $525,000 VA 100% financing and gives you 5%, 25,000, why is that a bad deal? I ask the question because we see that a lot of times, and the answers are still, well, there's no down payment. Well, that's because he doesn't have to. Well, the seller would feel better. Why? The seller's not underwriting the loan. The seller doesn't know the underwriting findings, the debt to income ratio, doesn't understand the residual income, doesn't understand reserves left over, work history. The seller, the buyer's agent, and the listing agent have none of that information. And we're happy to provide that if the buyer gives us the authority to do so. And we have in some cases, but the seller should have no say or care at all as far as what the down payment is if the borrower has been properly vetted and qualified. So that's another issue. But so it's not a bad loan when there's 100% financing. It's just not. Some we'll touch upon again. This is I kind of covered this in my previous slide, but down payment versus deposit, they are 100% different. And again, just to reiterate this, the VA does not require the down payment, so therefore they should not have to put a down payment. And it's a disservice to the service member if they're forced to do that. We still hear of situations across the United States where we're hearing it from NAR. I'm hearing it from various other nonprofit agencies that assist military, where listing agents are coming out and saying, we're not accepting VA at all. That's a problem. That's a big problem. They haven't even seen the offer yet. They're just saying no. And we all know that we can't do that in Massachusetts because of the veterans are a protected class. Massachusetts is one of 6 states where veterans are a protected class. So it's really important that, you know, these other states need to understand that that could be a big problem. So, you know, the down payment piece, they don't have to. And we're going to talk about something here in a second, which is what I think is one of the biggest reasons why you want to accept a VA over anything else. But a couple things here in this particular slide I want to touch upon is, you know, the deposit piece is a relative aspect of the purchase transaction. If I tell you, no, the earnest money deposit is designed to prevent the borrower from walking away from a transaction, and so that there's earnest money or good faith deposit in there, something that the borrower, the customers, does not want to walk away from. They can't afford to lose that. It's important to them. So what's the problem if I provide verification that the veteran only has $7,000 in assets and he's giving you $6,000? That's a pretty strong indicator that they're not going to walk from the transaction. If that's all they have and they qualify for the VA loan, to me, that is a solid good faith that they're not going to move from the transaction. If there's any other reason why, I don't know, but I would totally agree if someone said, well, he's got $150,000 in the bank and he's only giving me $5,000. Okay, I get it. But and I've done this before, where I've actually showed the bank statement to an agent, to a listing agent, and said, hey guys, all they have is 10 G's and they just gave you 9. That's all they have. That's their life savings. That's it. And the veteran had articulated that in an actual letter to the seller, and it worked. You know, the seller was like, okay, I get that. So the size of the good faith deposit, they're not going to be able to get to 5%, but that doesn't mean they're a bad buyer. It doesn't mean that, especially if you just dig a little bit more and be like, hey, so what percentage of this deposit makes up their total liquid assets? And ask the veteran if it's okay. I mean, we're in a tough market. Everybody's fighting to get houses. So you got to pull out all the stops. And I tell my veterans that. So if I had a listing agent call me up and say, hey, could you check with your veteran if it's okay to disclose what percentage of the deposit makes up their liquid assets? I would say, absolutely. I'll call them and say, hey, listen, you know, this is what they're asking. Are you okay with that? 99% of the time, they're gonna be like, yeah, fine, I want the house. And if a seller sees that he's got 15 grand, he just gave you 12,000, it's not 5%. It might be 2.5 to 3, but he just gave you 12 of his 15, and that's all. He's not walking from the deal. He won't. So I think this 5% that we all got hung up on, where there's nothing statutorily speaking that says it's got to be 5%, but we've all kind of, from a common law perspective and the industry perspective, have all sort of agreed upon that. And I think our service members and our servicemen and women earned a little bit more of a right to maybe have that number altered for a little bit. As a non-vet, when I bought my house, I put down 5%. That's what the seller wanted. I said, okay, I can do that. And I think that's fair. But I think that just some additional concessions and consideration should be provided to our military, because it's an amazing benefit for them and we want them to use it. And then last piece, we have, I do usually get some agents that will say, well, if they give a deposit, they get that back. They don't get that back, not always. The nice thing about VA is if they do provide a deposit of 3, 4, 5%, and that's 10, 15, 20,000. If they give a deposit of 20,000, 100% financing, their closing costs are 7,000. Well, then they're only going to get 13,000 of their deposit back, because the deposit will be applied towards either the down payment and closing costs, or just the closing costs. So in this case, the $20,000 deposit covered the expense. And so the veteran walked out of there with a $13,000 check. That's pretty cool. They're always happy when that happens. So I think it's important to understand that the deposit is important. The veterans need to make the deposit. It doesn't have to be 5%, in my opinion. We have to explain to the sellers that it doesn't. It's relative to the individual, and that the veteran is not going to get the entire deposit back if they're going to be obligated to pay all the settlement charges, part of the transaction, closing costs, taxes, and insurance. So I think that's important, that we educate everybody on that. I think on a VA, if I'm a listing agent or if I'm working with a seller, I'm always going to consider a yes. Consider a yes. Now listen, guys, I get it. You might have someone come in that just offers way above. Totally understand. You might have someone that comes in and gives you a $150,000 deposit, waives this, waives that. That's fine. The veteran can waive any contingency that they want. They can waive the appraisal. They can waive financing. They can waive inspection. They can waive anything. VA has no say in the contractual agreement between a seller and a buyer. They will have to sign the VA mandatory clause, but if you write the contract in such a way that we just did a recent purchase where the veteran signed a purchase and sales agreement, and he was allowed to, they signed the deal, and the veteran agreed to pay above and beyond up to $25,000 on the sale price, on the appraised value, sorry. And they signed the mandatory clause and they closed, and it worked out fine. That's actually, I believe that's Eileen and Natalie's deal, I'm pretty sure. So here's some reasons why you want to consider yes. 100% financing, guys, that's the best thing about it. They get to keep they get to keep almost all their money in their bank. What does that mean? Well, we're going to talk about a little provision here that's really a cool add-on, but what better way? You have a conventional loan, your minimum down payment's 3%, you're already on the hook for X, you've got closing costs, you're on the hook for Y, and all of a sudden the value comes in low. Now they got to find more money. That could be difficult, depends on the situation. Whereas with a veteran with 100% financing, all their money is still in the bank with a deposit. If the value comes in low, we can make up the difference. The veteran can pay the difference, and because they have the money, that's okay. So it's really cool. 100% financing is what makes deals stay together 9 times out of 10. You do have a statistically greater chance or equal chance of closing relative to a conventional loan. They're just about the same. Our underwriting criteria for VA is far more forgiving than conventional or FHA or USDA. Increased gift opportunities, lower FICO scores, expanded debt to income ratios. VA doesn't work on a debt to income ratio basis. We work on residual income. So it's very important that that's some of the minutia, but we look at residual income on VA loans. So when I do a pre-qual for a veteran, I have to ask how many children you have, where are you, what's the square footage of the house, any child support, any alimony, or any non-taxable income, because those are additional child care expenses. Fannie and Freddie and FHA don't count those. We have to ask these questions because we calculate residual income. So it's very, very important. Jumbo loans, you don't even need, jumbos, we're going to talk about that in a second. There are no overlays for jumbos. No reserve requirements, no first-time home buyer limitations, no minimum assets, no nothing. VA jumbo is the exact same thing as VA non-jumbo. Really awesome. Reduce income and asset documentation. VA, I need 1 month bank statement. conventional 2 months, FHA 2 months. I need one pay stub for VA. Conventional might be 30 days. So there's a lot of benefits there as well. And Tidewater. Now, this is real quick, guys. Tidewater is the game changer. No other loan option that you have available, Fannie, Freddie, FHA, USDA, provides agents this opportunity. You get to save deals with VA over the other ones. Every time everyone on this call has done a conventional loan, FHA loan, we've probably all experienced the undervalued situation. You know what happens? You just get the appraisal and it is what it is. There's nothing we can do about it. Whoop, there it is. It's a $500,000 purchase. Value came in at $475,000. There is no ifs, ands, or buts or fighting, no reconsiderations of value, no fighting the appraiser. It is what it is. Unless it's fundamentally wrong, that value is what it is. VA, not the case. With VA, we have what's called Tidewater. Now, Tidewater is awesome. Once the appraiser identifies the value will come in under the agreed contract price, the appraiser is required by guideline to reach out to a point of contact, listing agent, and say, this is a Tidewater. You have 48 hours to give me 3 additional comps, so that way we can try to get this value to work. No other loan option. Now, if I was in this market, with things being as crazy as they are, I would accept VA over anybody else, because at least during the process, I would know that there's either we're going to be fine or we're not. And you'd know that before you even get the appraisal. It saves at transactions all the time. I had 5 or 6 Tidewaters in 2020. So based on my production, it doesn't happen a lot. But when it does, every single one of those 5 transactions that we had Tidewater on closed. Either the seller dropped the price, the seller and the buyer negotiated, or the veteran paid the difference. Didn't matter. But you're given the opportunity to actually fight it. And yes, you can buy a house if it's undervalued. No, the house doesn't have to be perfect. And guess what? I can give you guys all the phone number to the VA Construction and Valuation Division in the Cleveland Regional Loan Center. Agents are allowed to contact the VA on their purchase transactions at any time regarding if you feel the appraisal's wrong. If you want to order a reconsideration of value, you have the authority to do that. The veteran has the authority to do that. You can't call Fannie Mae. You can't call Freddie Mac. You can't call FHA. VA wants to talk to all of us and wants to make these deals work every single time. It's the only loan option out there that really does all that they can do to make it happen. So it's phenomenal. And we're going to be doing another VA webinar with my buddy Marty, who's the valuation officer in Cleveland, pretty soon. And I would love to see all of you guys on there. So this is awesome. VA 2019, January 1st, 2020, no more VA loan limits, none. Veteran can purchase with Caliber a $2.5 million home, no down payment, no PMI, have rates as low as 2.25, and it's treated like anything else. There's no special guidelines. So for those of you that operate in high-cost counties or high-cost communities, the Linfields, the Brooklines, the North Andovers, the Andover, the VA is perfect. And by the way, veterans that are going to look at jumbos like this, I've 790 FICO scores, ridiculous amount of money. Why would I want to put money into this particular asset when I could take my money that would be for a down payment and maybe put in the market or do something else? So big, huge thank you to the Blue Water Navy Act, HR 299. Me and my team actually worked on this particular piece of federal legislation to help correct the verbiage so this was feasible. So my buddy Jeff Wilson, Ken Bates, we worked with our VA committee and the MBA VA committee to make sure that the verbiage was correct, and it was pretty awesome. So no more VA loan limits. It doesn't matter, 100% financing. Caliber, we stop at 2.5 million. Other lenders might be 1.5. I think there's one lender that goes up to 3. But my biggest last year was I did a 1.2 million 3-family in Boston, 100% financing, owner occupied for a vet. So that was pretty awesome. And I think we closed that in like 39 days. It's pretty easy. Here's some cool stats. These are the Ellie Mae Origination Insight Report. It's public. You guys can see it. You can get it. I can give you the link anytime you want it. It shows right here. This isn't for March isn't out yet, but this is through February of 2021. Monthly origination, time to close. Conventional, for the most part, in February of 2021, 49 days for conventional. VA was about 55, an extra 6 days, and that's because of the appraisal process. The appraisals were all backed up, so appraisals are taking longer, and we all know that, right? So not a big deal there. But Caliber, we're doing very well. We're closing, like I said, in 2020, 29.4. I think we're closing VA right now, right around 30 to 31 days on average. So we're beating the national average there, which is really important. This is sort of the percentage of loans that close. And I think it's important to note that this is the percentage of loans in a 90-day cycle that close conventional versus VA on a national average, okay? And the 12-month average for 2020, 77.84%, 79.04% of all conventional loans closed in that 90-day cycle. VA was 77.84. You're talking about a 1.1% difference. Statistically, that's negligible. So you're talking about almost the exact same closing percentage in a 90-day cycle. This is from a nationally recognized aggregator of closed data. There's the same, again, it's just everything that I'm saying is reiterating there's no difference. And you're just as likely to close a VA as you would with a conventional. So very important data. Now, agents, for buyer's agents, if you want to make more money, and I don't like to teach this, but this is just fact. If you want to make more money on each transaction, you're going to want to work with VA buyers. And here's the reason why. I pre-qualify people based on what their comfortable monthly payment is. Where do you want to be? It's not about what you're qualified for. It's about what you want to pay that keeps you and your family in the house, going on vacation, saving money, and whatever it is. This example, borrower comes to me and says, I want to be at $3,000 a month. That's it. And I only have 3% for a down payment. Okay. And this works whether it's 3%, 5%, doesn't matter. It's the same. So as you can see here, the conventional loan, that borrower would have to purchase a $500,000 house with 3% down, taxes of about $6,000 a year, insurance of $1,200 a year, PMI of 295. That's a 0.83% factor for PMI. That payment would be $2,972 for that borrower, all in. The veteran, the agent on that, I'm just assuming 2% on that deal, 70-30 split. I get it. You guys all probably have different, but for 70-30, agent made $7,000. VA loan, you get 19, almost 19. What's that? 500 divided by 575. I think I didn't do the percentage on that, but how much additional buying power that? That's 14% more buying power with a veteran because of the following. He can go up to 575, no down payment, 730 FICO score. Everything's the same. No PMI. Taxes are a bit more. Same insurance. That payment's $2,989. So there, in this particular deal, guys, you made an extra $1,000 on that transaction by working with a VA buyer who has 14% more buying power because the conventional borrower is limited on other issues, on PMI, down payment, interest rate. That's fact, right? And then when you add on top of this VA loan offer that you're looking at, you bring in Tidewater and greater flexible underwriting guidelines, you increase the chances of this buyer closing. And if we just articulate this to the seller, it's pretty important stuff. And I think this is very compelling data. You make an extra $1,000 every time in this scenario compared to one or the other. So I know there's some agents out there that don't want to work with VA, but I don't know. I could use an extra $1,000 in my pocket 10 times a year. That's pretty cool for me. And some cool stats with VA. There's 380,000 veterans in Massachusetts, my friends. There's only almost a 7% actually have a VA loan. So what if you take those two, you add them and you equal it out, what does that mean? Huge marketing opportunity. Huge number of veterans in Massachusetts not using their VA benefit. I think it's time that we target. Well, I don't like to use the word target. Time to focus on marketing to those men and women. Important. 1.2 million VA loans were guaranteed in 2020, and they're predicting 1.7 million in 2021. That means huge opportunity to increase your business, find a niche, help your community, help military, help veterans, and make an extra $1,000 perhaps or more plus or minus on every transaction. So all cool marketing data. Again, lower rates, no PMI, greater buying power, and that's just going to be more money for you. The default rate, the foreclosure rate, the delinquency rate, it's all lower. And I just threw that in there that the pest inspection doesn't have to be paid. And that's really what I wanted to focus on, was some of these sort of myths and rumors that are out there that really they're unfounded, because it's changed so much over the last few years. There's huge opportunity for our agents to saturate the market, find the veterans, get them into houses. And the last thing I didn't put on here, I'll just tell you, condos, guys, don't freak out. Do not freak out about condos. My team just got 2 condos approved VA, and it took 6 business days. So 6 business days to get a condo approved, where a lot of lenders will tell you it's 60, 90 days. They just don't do it a lot, and that's okay. But it took us 6 business days. Caliber, we are huge, and so we also have full DELRAP authority for FHA. I just helped an agent in South Peabody on Linfield Street. We got an FHA condo, 20 units, fully approved in under 3 days. So we have that ability as well too. But VA, guys, we get them approved all the time. 6 to 7 business days is common right now. And we'd love to help you listing agents that have a condo. We'll get it approved, help you market it, and then you can flip the MLS to say VA friendly or VA approved, increase the number of agents that can show that property to VA buyers. Pretty cool stuff. So I got about 10 minutes left, I guess, for you guys to answer some questions. I'll look at the chat box, but I wanted to thank Tim and all of Keller Williams for the opportunity. And I just, anytime I get a chance to talk and educate and talk about how amazing it is. And by the way, these are the most loyal customers you will ever have in your entire career. That once you close one and you do a great job, and there's some other tips I can teach you agents on how to differentiate yourself from other agents in the market, and it really resonates with the military. I can show you guys that later on, but they're insanely loyal. So let's do some question and answers, Tim. What do you say?
Yeah, no, Rick, I truly appreciate it. What's interesting, I've talked to you about it, but I live at Pickering Wharf. We bought there a handful of years ago, and it is such a difficult place to go ahead and get a loan on for a multitude of factors. Do you know what it is? It's VA approved. And so you have all these other factors that stop you from buying there, yet it's VA approved, and it went through just like that. Crazy, right?
I'll tell you, it's I'm happy, Julie. I'm happy to answer any questions. We got a very simple list of the documents that we need. And the nice thing about VA condos, VA just loosened up 2 of the restrictions. Did you guys know that VA issued guidance early this year? You no longer need private road maintenance agreements on properties that are on a private road in the Commonwealth of Massachusetts, because of, you don't need private road maintenance agreements anymore. And also, one of the restrictions that VA just took off, primarily there's 3 things that kill VA condos. One is litigation, which we don't run into often, but if it is, it's a problem. 2 is a first right of refusal, which never happens up here, but that's a very common thing in Florida and other states, where the condo association board has say over whether an offer is accepted or not, which is, to me, mind-numbing as to how do you manage that from a fair lending perspective or fair housing and not discriminate. But the third was a leasing restriction. Sometimes you run into that where the deed or the master deed, the declaration of trust bylaws will say you can't lease the property. Well, VA is now issuing waivers on that. Veteran fills out a letter, simply signs it, dates it, gives it to the regional loan center. They send that up to the deputy director, John Bell, or the director, Jeff London, and they waive it. So condos are super easy. I can give you guys the list of what we require, and we can get that submitted in usually 24 to 48 hours. And like I said, the last 2 that our team has done has been 6 business days. So it's pretty easy. Let's see here. That was Julie's. Linda, who pays for the pest inspection? Anybody can. The veteran, I've been doing since 2015 when the circular was issued, every single one of my VA loans, a vast majority of them, the veteran has paid for the pest inspection with no problem. So that's okay. If you got a lender saying that the seller must pay for it, they're probably not up to speed on VA and probably don't do a lot. So that's the reason why for that. And then Patricia, the down payment always an issue that needs to be explained. Also present VA. Yeah, and I hope my data, Patricia, shows you that. I mean, clearly, we're closing VA in 29 days in 2020. That was average. I mean, there's a lot of streamlined refinances in there, but purchase transactions for us, easy 30 to 31, 32 days. And again, not a problem. It's a function of communication with the veteran, the consumer, the agents, and if we're all on the same team, we're all on the same page, we can get them done very, very, very quickly. And but yeah, there's a huge opportunity for our agents out there to help a lot of military. And you know, like one of my last slides, make a little bit more money as a buyer's agent. You're gonna be able to show bigger houses, and that's important in today's market, especially in the North Shore, for God's sakes. It's crazy. So,
Absolutely.
I just got
yeah,
a quick question for you, Rick.
Go ahead,
Chris, I have
Robert.
a question.
Hey, Robert.
Hey, how's it going?
good buddy.
So, to my knowledge, and I wanted you to correct me if I'm wrong, VA loans, they require owner occupancy for the first year, correct? Because I know a lot of veterans, like young guys who are like, you don't know when you're going to get transferred. You have no clue what's going to happen. I mean,
Right.
everything changes. And they're like, I want to put tenants in or have the ability to put tenants in if, you know, I got to move and go get deployed to Florida, leave Massachusetts or something like that. It's a
Phenomenal,
concern that's been coming up, and I'm trying to address that.
phenomenal question. And that is actually something that is addressed at the VA Lender Conference every single year. So the regulation in 26-7, Chapter 4, which is the credit guidelines, states the intent of the service member at the time of consummation must be to owner occupy the property as their primary residence. The intent. Now, if they have orders to Massachusetts, and that's called a PCS, or a permanent change of station. Sounds like you have some friends that are active duty. They come here to Mass, they're on orders, and they buy a house with you, and their intent when they close was in fact to go ahead and live in it. And they do. And let's say the 2 days after they close, they close, they're in their house, they move in, and their orders change. And the orders change, and now they're going to PCS to Louisiana or Alaska or Washington State. You can put renters in there right away. There is no guideline. That's something that loan officers and some lenders state, is that you got to live there for 12 months before you can rent it. Absolutely not. The intent must be at the time of consummation, closing, that they're going to occupy as their primary residence. That's the regulation. Now, vice versa. If they're about to close and they're a week to 2 weeks out and the orders change and they're PCSing, their intent has now changed. They're not going to be occupying as a primary residence. You must terminate the transaction right away.
Okay, and are you going to need those orders provided if that happens? They can't just say, all right, this is going, I'm moving out, I'm just going to get tenants in there. You need copies of all that information, correct?
Yeah, usually what's going to end up happening is, like, when a PCS is coming into Boston, and if I'm doing an active duty purchase, I'll get a copy of the orders, and I know that so on the orders, it's, you got to see the way government documents are written. It's bananas, but it's like there's no spacing, there's no tabs, there's no paragraphs. Yeah. It's just a straight, the orders in there will give you the zip code of the duty station, so that way we can calculate the proper BAH and BAS. And generally, your orders are at least for 12 months. It could be 2 years, 3 years. Sometimes if they got a promotion and they're doing recruiting duty or whatever. So that's fine. And then we close. But if we close and then 3 days later, their orders change, I would say, I would say it would be polite to maybe send those to the mortgage professional to give the lender a heads up, because it's not the lenders that turn veterans in for when they violate the owner occupancy requirement. It's their neighbors. Oftentimes, VA has told us this. It's oftentimes other veterans or neighbors that realize that they bought it as a VA, but they didn't live in it, they didn't move in it, and that pisses some people off. So they contact VA central office and they rat them out. And then there's an escalation clause in the document. If you violate that, you got to pay the house off in 30 days. So I would say, to your example, if their intent was to move in, they moved in, they closed, they're good. 4 weeks later, their orders change. I would simply say they get the new orders with the new duty station and the effective date of reporting. Out of respect, give that to the mortgage professional that closed it, so that way we can help prevent them from getting banged up by VA. You know what I mean? Yeah. I haven't run into that because most of my active duty they're at Coast Guard Station Boston or Gloucester or Portsmouth Naval Yard or Hanscom, Camp Otis or Westover, and or a reserve unit, maybe like at Camp Curtis Guild or something like that. But they're there for a while. But that's a phenomenal question. That's a great question, Robert.
And I just had one more follow-up. there was a limit at one point, right? Wasn't it like 480,000? And did you mention that was removed now and it's like 2
So
million?
the VA loan limit prior to January 1st, 2020 was associated with the Freddie Mac home limits. You know how your mortgage, your people that you work with, they'll send out emails or notifications like loan limits changed, loan limits changed.
Yep.
You get them in January. We usually find out in December. The loan limits are changed by statute by Freddie Mac. And so that's what VA was once tied to for a purchase on a veteran that's using their VA benefit for the first time. So in 2020 or 2019, it was 698 was Essex County, Middlesex County, Suffolk County, Plymouth, Bristol, Norfolk. What Blue Water Navy Act did was it disassociated VA loans from the Freddie Mac loan limits. So for a veteran, first-time home buyer, first time using their VA, working with Robert to buy a house, 2.5 million with us, there's no loan limit. Now it gets a little muddied and it gets a little confusing. We can talk about it. Happy to jump on a call and explain this to your coffee, whatever, how this situation. But if you are working with a veteran that PCS, and since you seem to have some active duty experience, that PCS into our area and owns another VA loan in a different part of the country, like say in Louisiana or Alabama or something, whatever, we then revert back to the old way of calculating remaining entitlement by using the loan limits that are been established in your county. So that's a little bit of I'd have to give you an actual physical example so you'd understand, but first time use, first time home buyer, just know that there's no loan limits for VA whatsoever.
Okay, awesome. Thank you, Rick. I appreciate it.
Not a problem, man. Very welcome, Linda. It's always a pleasure. If there's any other questions, happy to answer them. But you know, there's always a lot of, I heard this out there in the entire real estate, including mortgage community, that's just really not true. And so I think that it's very important we continuously educate ourselves on this particular benefit and what it can do and what it does for our servicemen and women. So, but yeah, if that's it, if we're good, we're right at an hour. That's perfect. And I just want to thank you, Tim, and everybody that attended. I hope everybody got a little something out of this. And you guys should have all my contact information. If you have any questions, reach out. Happy to work with all of your clients, including non-VA, but I'm looking to do more with you guys in 2021.
Rick, it's always always awesome to have you. And now that, like I said before, we're getting back to in person, we're definitely going to have you back here in person. And you know, this is just great to have on the schedule regularly. So thank you, Julie. Julie has really spearheaded up a lot of our career development. So thank you for putting this together, Julie. Julie, do you have any parting words for Rick?
Thank you. I've never worked with a VA loan, but or with a VA buyer, but I've got one lined up that I hope to do something with in this year. So I appreciate all this information. It was really great.
Yeah, well, happy to help. It's just there's a lot of stuff out there. And listen, you know, what people don't know, they don't know. And you know, and sometimes we rely on you know, some of our more experienced, tenured individuals in our offices, and they just haven't had experience. But well, maybe they had a bad experience, and that's kind of stuck with them for a long time. And that happens more often than you realize. And then therefore it dissuades agents and veterans from using the benefit. And so I think that it's any opportunity I can get to talk to you, I appreciate it. So thank you.
Yeah,
Julie,
awesome.
I'll say that if you're going to have someone using a VA loan, you definitely need to go to Rick. My very first transaction was a Vietnam vet. Rick will remember that one.
Oh, yeah.
And I never would have got through that transaction without him. And it was such an education for me. So I wouldn't go to anybody else for a VA loan.
Yeah, I remember that transaction, Linda, and I really appreciate that. And that was a condo in downtown Beverly on Rantoul Street, I believe, or Cabot. We got
Yep.
the condo. It was approved in like 12 business days.
Yes, you did.
I will always remember that loan, Linda.
Yep.
Well, Rick, thank you again, buddy. Truly appreciate it. We'll be having you back. I'm going to distribute this out. It's recorded. Rick, just tell them real quickly how they can get a hold of you.
Best way, you go to my website, www.rickmortgage.com. All my contacts there. And the email is really simple. It's rick.bettencourt@caliberhomeloans.com. And that's it. I mean, all my contact information are in those 2 locations.
Perfect. And I'll send that around to everybody in our market centers, both Beverly, Salem, Newburyport, Topsfield, and Reading and Revere with all that contact. Rick, thanks again, buddy.
You
Truly
guys are
appreciate
awesome. I
it.
appreciate it. Thanks again. Bye, everybody.
All right. Take care, Rick.